Blockchain security firm De.Fi says crypto investors lost $54 million to Rugpulls and scams in May. Our first guest is Michael Rosmer, De.Fi co-founder. Welcome to the show, Michael.
Hey, welcome. Great to see you here.
Awesome. So let's just lay the foundation here. Why don't you start off by telling us what exactly a rug pull is, what kind of actors participate in these, and then we can dig a little bit deeper into some of the findings here.
So I think the typical idea of a rug pull is essentially what happens when you have a project that launches and they design something malicious in their code such that when people start to take the token and put it into a liquidity pool, so they basically are helping to facilitate the swapping process, that these people can basically drain out all of the money on the other side. So there's, a variety of different mechanics for how they might do this, but fundamentally that's the basic idea, is that they launch a token in order to try and attract a whole bunch of people's money in order to getting it into these liquidity pools, and then they've designed the code of the smart contract so that they can exploit it and steal all the money from the people who put the money in. So that's basically what it is.
You know, rug pulls have been around for, it seems like, as long as crypto has existed. Were you surprised to see this $54 million in May? And maybe talk us through some of the key findings that surprised you the most.
So actually, I guess this is a number that's come down over time. So if we were to look last year, it was much higher. Now, granted, that was kind of Terra Luna type stuff going on, so a little bit unusual. But even if we go to 2021, the numbers were almost 6 times this large. So, the numbers have come down quite a bit in general. It seems as though every month there is some fairly substantial amount of money that ends up being lost to hacks and scams. We publish a Rect database report. So for people who want to check it out, they can go and find out exactly how much it is on an ongoing basis each month. So that's, gives you some idea, but you can kind of see that the numbers are coming down slowly. Hopefully, we all wish it was a little bit faster, but I think that there's more awareness about these problems. We're building tools in our company to help people prevent this and sharing information. I hope that others do as well. And so I think it's on the right direction, although not nearly close to where we want it to be.
Yeah. And so what do you think, aside from, you think that there are better tools out there, but is there, from the perpetrator's point of view, why, there's still a lot of money to be had in Rugpull. So what do you think is causing, is it just that the demand for any type of altcoin, if you will, isn't there the way it was 2 years ago, that it makes it not as lucrative to go through the hassle of trying to do this? Or is it that they go through the hassle of trying to do this, it's just that their returns are never going to be as high as they were 2 years ago because the market isn't there?
I think it's a combination of things. I think certainly the TVL of the overall industry is down, right? So there's just less money in DeFi, period. So there's less money to steal. That is certainly one reality. The second thing that is also true is that project creators are getting better at creating code that it has less vulnerabilities in it. So as we discover more problems, you'll notice if you look at this chart that you put up on the screen, a few of these losses were from Arbitrum. Now, there's a difference between, is the team internally doing the scam, or is it somebody external who's attacking the protocol? And you find that the ones in Arbitrum were sort of some innovative code. The things that they were trying to do were, forward thinking. And anytime you release new code, there tend to be vulnerabilities. And so, you had some exposure that way. So we're getting less of that, which is positive. And then I think the third part is the users themselves are more aware of these scams and vulnerabilities, et cetera, and hence doing a little bit to protect themselves. And hopefully over time, that's going to get better and better.
So what kind of alerts are out there? I mean, you talk a bit about what you guys do, but what kind of alerts are out there that lets investors know what they're facing when they put their money in a new coin?
Yeah, we designed, so the traditional thing that would happen is you would have audits on contracts, and you could say, okay, because Trail of Bits or Certic or somebody like that audited it, there's a better chance that it's not vulnerable code. The problem with that is, generally speaking, the real opportunities are to get in early, and it takes time and costs quite a bit of money to have audits. So our firm built the world's first automated smart contract scanner. And so a person can just connect their wallet to our scanner, and it will automatically, for free, scan the contracts for them and tell them if there's any vulnerabilities in that code. And then we've integrated that with CoinGecko Terminal as well as many other different places. And so as we're expanding the number of places that have the APIs built in, it will scan the code for you automatically and warn you, oh, this might be a honeypot. This might be something where there's some risks. And so this is probably the most scalable option because you need something that the masses can have with virtually no effort. So that's what we've been focused on.
The report pointed to the BNB chain ecosystem having the most incidents. Any information or indication as to why this might have been?
I mean, there's a fair amount of TVL there relative to a lot of other chains. So, you just kind of look down, you have basically, 5 or so chains that are probably worth targeting. But I think from the beginning, BNB chain, or BSC as it used to be called, was a chain that was very much focused on sort of degen activity, where people want to get really high APYs. They're kind of more careless. And so as a result, I think it's attracted those types of projects and those types of users. And then where there are users who are willing to be risky, you're going to get people who are going to come and exploit the people who are behaving that way.
Have you done a TVL to user analysis, or any kind of thing where you say, hey, there's more likelihood of it happening on such and such chain, as a percentage of its assets
it's
compared
far
to
more likely to happen on BNB.
Okay.
Yeah.
Any other ones that we should be aware of?
I mean, it seems to be frequently that when there's something new coming out, that's a place to be wary. So things that have been out longer seem to kind of go through figuring out what's going on, and then the risks go down a bunch. Like you'll notice, the main 3 here that you're looking at are BNB, Ethereum. Ethereum just has so much TVL that it's kind of an obvious place that people would go. And then Arbitrum. Well, Arbitrum is kind of the new hype coin or chain that's been growing. You don't see anything on Avalanche. You don't see anything on Phantom. You don't see anything on, right? So, yeah, I would say stick to the ones that are more established if you're looking for safety.
So, along those lines, we saw a rebound in some of the, so several coins, of course, were named in the SEC's case against Binance and then against Coinbase. We've seen those guys, they took a hit last week when it all happened, and now they're rebounding. What do you think is driving that rebound here? I mean, this kind of space here, and obviously it involves a lot of DeFi. What's bringing it back to life?
Well, I think one of the things is just sort of mean regression. Anytime something goes down really fast, people look and they say, well, here's a buying opportunity, and let's come in and pick it up. So the prices that you're seeing in a lot of these assets, you haven't seen in quite a while. In some cases, they dropped to lows. Like if you look at it, hasn't rebounded strongly, but Near, for example, I think was to the lows in sort of pre-bull market periods. So long way back. Solana, obviously dropping down to close to the previous lows. Cardano, similar sort of thing. So I think that's the first part. It's just that anytime you get a very rapid sell-off, you're going to get people are going to come in and buy it up and push it up on the other side. I think the other thing, though, is that I think people sort of realize that it's probably not likely that the U.S. as a country wants to drive projects out per se. And so it's noteworthy that although they went after Coinbase and Binance, they haven't gone and sued any of these projects at all directly. And that's kind of telling. I would suspect, this is just pure speculation, that part of the reason for that is the government in the U.S. operates largely based on lobbying influences from the financial industry. And the financial industry would like to eventually be the player who plays as Coinbase or Binance themselves. And so they want to knock those guys out, but then still be able to have U.S.-based projects that get traded. So that's just pure speculation. It might be completely off, but that would be my theory.
Michael, thank you very much for joining us this morning.
It's great talking to you.
That was De.Fi co-founder Michael Rosmer.